The stock market took a tumble this week, folks. It was a bloodbath out there. Fears of a recession are mounting. Investors are hitting the sell button. The major indexes took a hit. The Dow Jones Industrial Average dropped 0.7%. That's 287 points, folks, a big drop. The S&P 500 slipped 0.2%. The Nasdaq Composite, after a terrible Monday, managed a small gain of 0.4%. This downturn is serious, people. The Dow closed below its 200-day moving average. That's a key indicator. It suggests the market is losing steam. This hasn't happened since November 2023. We need to pay attention to this. The bears are out in full force. The bulls are nowhere to be found. This market is getting hammered. We haven't seen selling like this in months. It's time to buckle up, folks. This could be a bumpy ride. Why the sell-off? Recession fears, plain and simple. The economy is showing signs of slowing down. The White House trade policies are not helping. Tariffs on Canada, Mexico, and even China are biting. Federal spending cuts are also a concern. President Trump says it's a period of transition. Transition to what? A recession? Treasury Secretary Scott Bessent calls it a detox period. Detox from what? Growth? These are worrying signs, folks. Citigroup downgraded U.S. stocks to neutral. They cited a pause in U.S. exceptionalism. That's a nice way of saying America is losing its edge. Not good. The markets are reacting accordingly. Small businesses are hurting. The NFIB Small Business Optimism Index dropped in February. Rising prices and uncertainty are to blame. Small businesses are the backbone of this economy. We need them to be strong. It's not just the overall economy, folks. Company news is also driving stock prices. And some of it is not pretty. Kohl's shares tanked 14% after a disappointing earnings report. Weak guidance for the year is not what investors want to hear. Southwest Airlines, on the other hand, saw their stock jump almost 10%. They're charging for checked bags and introducing a basic economy fare. Investors like that, but hold your horses, folks. The stock fell slightly after hours. Asana shares plummeted over 25% after the CEO announced his retirement. Weak guidance added fuel to the fire. Oracle, however, saw gains after hours despite missing earnings expectations. A 25% dividend increase did the trick. Investors love dividends. Delta Airlines shares initially soared on news of new baggage fees, but then they plunged after hours. The reason? Lowered guidance for the first quarter. Reduced consumer and corporate confidence is to blame. That's never a good sign. So, what's next for the market? Investors are eagerly awaiting key economic data. The Consumer Price Index, or CPI, is due out on Wednesday. The Producer Price Index, or PPI, follows on Thursday. These reports will give us a better picture of inflation. Analysts are predicting continued market volatility. Wolf Research says we're in for a bumpy ride. And they're not alone. The market is clearly on edge. Investors are nervous. And they have every right to be. My advice? Stay the course, folks. Don't panic. But be prepared for more volatility. This market is not for the faint of heart. Keep your eyes on the fundamentals. And remember, in the long run, the market always goes up.